The weekly dividend ETFs are tanking. So why am I smiling? Well, I did some buying today. Welcome back to the channel, guys. My name is Spencer, and I talk all about investing. I'm a little bit obsessed with it if you guys are new, and this is our weekly dividend ETF account. And so I am smiling because I have been buying a couple of my favorite stocks at crazy discounted prices. I don't know what the market's going to do. It might continue to go lower, but I just keep scooping up shares at a discount, really. And that's the way that I'm looking at it now, as a crazy buying opportunity. So we're going to go over the weekly dividend account. We're going to talk about what is making us money, what is losing us money, if any of these are still in the positive since I bought them over 23 weeks ago. We also have a new weekly payer that is already in the account, which I will be talking about today. So I hope you guys enjoy. Don't forget, if you like investing content, if you like making money in the stock market through dividends, you are in the right place. I talk all about dividend ETFs, so don't forget to like and subscribe so you don't miss any updates on all these weekly payers. Thank you guys so much for watching. Let's roll that intro. Our account has never been this low. So we're total down $100, almost $95. Now I know this, you're gonna be like, what's going on? No, it says your P&L is down $253. Well, this is not counting the dividends we have received, because DRIP is not on all the way. So it's just counting our total P&L. I only invested $1,300 to start, and we have used up all of that money, and now we only have $36 left over in cash in the account. So although it is really red, we are not doing terribly, which is really interesting. We are what? We're not even down 10%, which is insane. Absolutely insane. And today was a bad day. We can see it's 4.3% today alone, and $54 in the red, because today was it was a bloodbath. There's no other way to describe it. But we're going to dive into these. We're going to see what of these are even making money, talk about a brief overview of each of them, and then give a full breakdown on our newest weekly payer, which I'm sure you guys have heard the news about. I will be doing a full video about it relatively soon. It has been really, really bad up until the date where it is talking about going weekly. So we'll see how it pans out, if the weekly is good, if it's useful, and especially if these funds can keep up, and what I'm doing with a lot of our fan favorites that are in this account but are continuing to dive deeper and deeper into the red. One crazy positive note, I have a new favorite stock since the market has been totally beaten up. One of these has really outperformed even in this really bad spell the market's been going through, which we'll get to. But first, iwmy. You guys know my issues with the Defiance funds. We have an average cost for iwmy, 3 shares. We paid $34.61. It's currently trading for $26.50. We are down 23.5%, which is awful. And looking at the chart, it's not going to get better anytime soon. I mean, it did do really well. It reverse split, which is why it went from low all the way back up. And so it's looking like it may reverse split again. If it continues to fall, I don't know how they're going to get out of that. We bought all the way up here. Yeah, $34. It's $26 and just slowly trailing downward. And there really isn't an excuse for it. It's just the way this fund has been going. AUM, 106 million. Let's see. Dividend yield, 102.64%. Not sustainable. Your NAV is eroding away. You're getting insanely high dividend payments, I will say that. But your money is just fleeing. It's going away. Even with DRIP on, this is not one of my favorite funds, and it is in the red. We can check the last 4 dividends. We had a 30-cent dividend, a 27-cent dividend, a 25.5-cent dividend, and a 28-cent dividend. So again, not bad dividends. This last one was even a little bit higher than the one previous. But what's the point of all this? Now, I know you guys are probably familiar with my talk about income investing, where we are thinking the income is the most important part. NAV erosion is a bummer, but we really care about how much money is getting kicked out from these funds. All in all, I do deeply care about that, but I also don't want to see my initial investment dwindle down to nothing, because that can be a massive negative. Now, I just did a video on 100 shares invested into MSTY, and I'll link that at the end for those of you that are interested. And the results were really interesting with that, on how well it actually did, even with like a 40% drop in your initial investment. But I don't think we're going to get the same returns from iwmy. I'm pretty bummed with the Defiance ETFs as a whole. You guys know that. Let's jump into qqqy and see if it's held up any better. Well, we're down 21.44%. We have an average cost of $34.37. Currently, it's trading for $27. Oof. These ones, okay, here's my initial thoughts with Defiance. I thought because they do it's cash secured puts. I thought in a down market they would perform better, but all it means is that their NAV just erodes at a faster pace. You know, like, I don't really even know what to say about these. If you guys own any of these, let me know, because I'm curious, like, what is the goal behind these funds? Is it to just like erode your capital away? There could be some tax benefits to that and get crazy good payouts, but why not just not invest your money if that's the case, or do like a high yield savings account? I don't know. Do you get taxed on high yield savings accounts? I never even thought about that. Anyways, QQQY, an AUM of 141.6 million and a dividend yield of 84%, about the same as we've been seeing. Every time the dividend falls down a little bit, the price falls with it, and so the yield has stayed relatively consistent, which is actually unfortunate. We would like to see the yield rise to show that the dividends are consistent, but they're not. Last couple of dividends, we see 22.5 cents, just under 20 cents, just under 20 cents again, and 21.55. So 21.5 cents, a little better than before. Same thing with iwmy. Maybe because the market is so volatile, they're kicking it up a little bit in the dividend department, but they're definitely not kicking it up in the price department. So I don't see how they're going to continue at this rate when this is what? A 5-6 month span. 6 months, 7 months, 8 months. How they're going to continue this for a full year without doing a reverse split. Like, it's just, it doesn't seem viable. And maybe these are a type of investment fund that I don't fully understand, and there's people that are seeking this style. I don't know. Let me know in the comments. But again, Defiance, the only ray of hope that I've seen is our next ETF, which is WDTE. Ray of hope might have been a bit of a stretch. It's down 14.5%. Average cost of $42.18. Current price $35.99. We only have 2 shares of this guy. Yeah, it's fallen off a cliff. WDTE was handling a lot better. It was holding up. It was a bit more consistent. We can see it only fell from 46 to like 39, which is still quite a drop. But compared to the others that are dropping double digits plus, I was like, hey, maybe it's the one to buy. And then this market flipped and this thing just tanked. So we'll see how it held up against the other two. I don't think it's the worst performer of the Defiance ETFs. Only time will tell. It has a low AUM of 70 million, which is funny because it's been the best performer of the Defiance ETFs, but it's also the smallest. And dividend-wise, 51.5%, which is still outrageously high. And as we know, it's staying consistent as the price falls. So, well, we'll see. We can see that the last couple of dividends, 23 cents, 23.5 cents, 23 cents, and 22.5 cents. So not a great dividend from this guy either. I'm kind of surprised. Normally the Defiance all go well together, but WDTE seems to be branching off and doing the opposite of what the other ones do, except for they're all falling. That's the only consistent thing about them. I don't touch these with my Roth IRA. I have them in this account just so you guys can see what's going on with them. I don't know if Defiance is planning on fixing these. I don't know how they'd fix them in the first place. It all goes over my head. All goes over my head. But I actually do have a bit of an announcement for you guys. I actually have 2 announcements. The first is, if you're not familiar with my channel, I am doing a giveaway for when we hit 10,000 subscribers. I'll link the video you have to watch to enter down below. For those of you that are interested, you can win $50, $100, or $150 that I'm hoping goes towards investing in the stock market. And especially on these red days, you can actually do a lot better than when it was at all-time highs. And announcement number 2 is I was invited to go to an ETF conference. I didn't know they were a thing. I didn't know that was something that people went to, but I've been invited. The channel has been invited, I should say. And so I am going to be going to Las Vegas in a couple weeks and making some content for you guys live. There's going to be a bunch of cool stuff going on, a bunch of information shared. I'm going to hopefully learn a lot about ETFs from CEOs and people that do this for a living, because I don't. This is not my full-time gig. If you guys didn't know that, it's just really fun and I enjoy doing it. So there's going to be some interesting content. I'm going to probably do some vlogs. I've never done a vlog before, but it's going to be pretty focused on these ETFs and what's going on. And then I'll also do some follow-up videos and do a full video breakdown on the trip and what I learned and the cool stuff that's going on in the ETF world. So I just wanted to let you guys know, if you do see some different content from me, it's not going to be a full-time thing. I'm not going to be a vlogger. It's not really my passion, but I wanted to let you guys know ahead of time. And I'm really, really excited. It's going to be a really fun trip. It's a short but sweet trip in Las Vegas, and I'm thrilled. I'm thrilled, and I'll give you guys all the details in the videos to come. So I'm very excited for that. Let's jump into the next set of ETFs. Now, this may surprise you, but I think RDTE is holding up really well, actually. Yes, it's down 19.18%, And our average cost of $44.36 compared to the current price of $35.85 is rough for all three shares. But look at this. We were trading in this kind of, I don't know what you'd even call this. It was between kind of like 42 and 39.5, roughly between there for a while. I was hoping for a nice breakout after. I don't do a lot of charting because, well, when I do a lot of charting, I go, oh yeah, it's going to run from here. And then guess what it did? Instead of going to 45, it went to 35, which, I mean, technically I'm half right because I was like, oh, it's going to go to 45. I got one of the numbers right. But anyways, we can see the AUM of 157 million. Not too big, but not too small. Probably on the smaller side in comparison to some of our massive ones. And a dividend yield, it's not 20%. It's probably in the 40s compared to a really high yield compared to a lot of the other ETFs. But it's not fully, hasn't been around for a full year paying those dividends. So that's why it's not completely accurate. We had some crazy selling kind of recently, not as bad as some of the others. I just don't think this fund is as popular, especially as like QDTE and XDTE, because the Russell, well, I thought it would be really solid. I really did. And I thought that because the implied volatility would be higher on the Russell compared to, you know, like SPY and the NASDAQ, but it's really not. And so let me know what you guys think. Would you be interested in a full video breakdown on implied volatility? I'd have to do a lot of research and I'd want to make sure I got all the details correct because I know a decent amount I feel, but then when I really think about it, like I'm like, why is this one not performing as well as I had thought? Why is the implied volatility not making the dividends higher than others? If you guys are interested in a video on implied volatility, let me know in the comments and I can add that to my list. I do have quite a list, but I think that one would be really fun to do and really educational for everybody that's investing in these. And maybe a video on NAV erosion as well, if I can find some more examples of NAV erosion. So let me know what you guys think. Last couple of dividends that we have seen, we had 25.5 cents, we had 20 cents, 19 cents, 15 cents. Oof, bad dividend. Not good at all. A pretty bad dividend. Really, really low. I don't think we've seen one that low in a very long time, if ever. When we pull it up on the chart, we'll be able to see on our dividend tracking spreadsheet, we'll be able to see if it's the lowest one we've had. But wow. A little bit scary. Doesn't make a lot of sense. You know, this thing tanked. Why, again, implied volatility. Why is it not high? Why are the payments not higher? We didn't have a day off last week. Unless we did, and I didn't know, but I don't think so. So, who knows? RDTE. But again, it is holding up a little bit better price-wise. Let's check out QDTE, and I'll show you exactly what I mean. Absolutely devastating, down 17.5%. And now that is, again, better than RDTE. But remember, RDTE was down like 5 or 6% lower than QDTE. RDTE was negative long before QDTE and XDTE even started dropping. So it has held up a little bit better. QDTE, $42.39 average cost and a current price of $34.99. I haven't bought more of these. I haven't bought more of QDTE. I'm debating it. Maybe doing some dollar cost averaging. I mean, I am dripping, so I am buying more. I shouldn't say that I'm not buying more. I'm buying more and more every time it drops and getting a lot more for my money. But it is a bit of a bummer watching all of this stuff just tank. We can see an AUM huge of 747 million and a dividend yield of 43%. Huge red day sell-wise. Everybody, like, this is absolutely insane. 1.3 million transactions today. 1.3 million shares traded, I should say. And it looks like it was predominantly red. Bummer. Last couple of dividends, we had 25 cents a share. We had 24.5 cents a share. We had 26 cents a share. And we had 15 cents a share. Man, everything's low. RDTE, QDTE, they're paying out 15 cents. Our only real hope is XDTE. So let's check it out and see if it can do better than these other two. I will say, XDTE has become my favorite of the RoundHill funds simply because it's only down 10.61%. Now, that is still very bad, but you're looking at a 7.5 and a 9, nearly 9.5% difference between this XDTE and the other two RoundHill funds. So it's holding up quite a bit better, and we did average cost down. That is a part of it. I bought a share of XDTE 2 weeks ago, and so that has pulled the price down, which is probably why. Bummer. But all in all, average cost $50.91 and a current price of $45.51 for our 3 shares. Yep, here's my buy. Bought at $48.11 while we're already down pretty bad just from that buy. But the cool thing is with this account, all these dividends that I keep getting paid out, I'm just going to keep buying these shares that are really beaten down. I'm not touching Defiance, but what should I buy next? I want to know what you guys think. Should I go with like LFGY for more dividends? Should I go for what's even any of the other ones? GPTY. I'm not going to put a bunch more money into YMAG and ymax because I want to see how they perform just on their own. I could buy more YBTC. I don't know. Let me know what you guys think in the comments. We can see larger AUM, 423 million. It is holding up better. I forgot to mention QDTEs. Theirs had dropped by like 30 million assets under management, meaning they are just losing some money. Lower dividend yield of 27.40. I'm still curious. I wonder this week if QDTE does better than XDTE because it pays out a lot higher in dividends, even though the price is worse. So we'll see what our total return is and see if XDTE can bounce back. QDTE was the winner last time when we put the two up against each other. So pretty interesting stuff. We did have a couple red days and a lot of green days too, which is kind of surprising on this pull down. Last four, 23, almost 23 and a half cents, 22 cents, 20 cents, and 14 cents. Oof. Even lower than the rest. Not unknown territory as we have had some lower dividends in the 15 range, but still really stretching lower and lower and lower, and I don't know why. Speaking of why, let's jump into our crypto ETF by RoundHill, YBTC. I gotta be honest, there's so many of these now that I'm losing track. Like, I'm not even joking. It's hard to keep up. Anyways, YBTC, we are down 20.41%. It's been rough. Crypto's back down. Bitcoin was below 80,000 last time I checked. I get the notifications on my phone, but you guys know I'm not the biggest crypto investor. Average cost of $48.75 and a current price of $38.80. Interesting with our two shares. Now, one thing with YBTC, when it switched to the weeklies, it's actually been performing worse, funny enough. But it really tracks well with how Bitcoin is doing. So obviously that's going to play a big role. And now, even though the markets are down, this one might be one that I'd consider buying into more because we're not in the lowest it's been. We're still a little bit above that. Bitcoin, they're saying we're in crypto winter now. It's kind of the terminology I've been hearing from a couple different people, a couple different commenters. And so, you know, I'm not sure what's going to happen, but if it continues to trail down, I might scoop up some shares and just get that income. And then when it does bounce back, when crypto bounces back, this thing did well. It ran from 39 to 57. So you're looking at a pretty good increase in your value compared to just relying on the dividends as well. And if you are dollar cost averaging low every single time you're down here and it keeps running, could be something to think about. Lower AUM, 138.77 million, and a dividend yield of 61%. This one does pay out some really, really high dividends, which is nice. A little bit of red, but not nearly as much selling as some of these other ones. We can see last couple of dividends. We had 29.27 cents. We had 28 cents. We had almost 23 cents, and now we've had 24 cents. So despite all the other RoundHills dropping their dividends, YBTC is holding up strong. Maybe it's crypto. Maybe it's just sentiment in the stock market versus the crypto market. I don't know. I know you guys aren't. Some of you guys are big fans of YBTC. Some of you guys are better fans of BTCI or BITO, which I'll put some videos out about BITO soon because it seems to be pretty much a fan favorite. But all in all, this one's holding up better. I will say that even with the price drop, it's probably one that I'd be more interested in buying once the market does level out, just because I do hold all the other ones already, and I like holding a little bit of crypto as well. Our newest weekly dividend ETF, ticker ULTY. I'm going to be putting out a full video about this because it is switching over to weekly dividends, I believe, in 2 days on March 12. And so I bought 16 shares because this thing is cheap, really cheap. And I'm already in the red. I wasn't this morning, but I am now. Average cost of $6.34 and a current price of $6.33. Now, let me tell you about my fears with ticker ULTY. This is just the fear. We're down an absolutely astronomical number from nearly $19 to $6. And if they're going to just do this over and over and over again and then just reverse split, I mean, you can see every time the dividend's paid out, it drops and it never truly recovers from that drop. So, I mean, NAV erosion, this is kind of what I would look at and go, this is NAV erosion. We were in a time when the market was performing extremely well. You realize a lot of these other funds were doing well during this time, not eroding the NAV, but actually going up in price value. And now this one just hasn't been. So our buy is all the way down here. I wouldn't be surprised if they do a reverse split. Maybe switching to weeklies will help save this one. I don't know. AUM is still huge though, at nearly 230 million and a dividend yield of 184%. Oh boy. That's because the price has gone down by over half in the last couple of months. Last couple of dividends, 70 cents, 57 cents, 53 cents, and 46 cents. Now we can do some pretty simple math, multiply this by 13 and see why the dividends are absolutely huge, which we pull this over, we'll do 13 times, what was this last one? 46.53, 0.4653, and you're getting $6. So yeah, the last dividend alone, you're paying out nearly 100%. Oh my gosh, you're paying out nearly 100% in the month. Absolutely crazy. Absolutely crazy. So when it goes to weeklies, we'll see what it does, but I don't know. I haven't been the biggest ULTY fan, and I have it in the YieldMax account as well, so we'll see how it performs. Fingers crossed. I'm not holding my breath on this one. A lot of the YieldMax funds, you know, if they switch to weekly, sometimes they do well, but we've seen how they've been performing in this market, so I don't know. If it goes to like $2, like we're stuck. We're absolutely stuck. Let's jump into our other massive losers from YieldMax this week. We'll jump into ticker LFGY with its massive dividends. The question is can it hold up the price, or are we just going to see insane NAV erosion with this guy as well? Average cost of $52.98 and a current price of $35.01. We are down 33.9% on our 2 shares. Oh, man, this thing is ugly. Just look at that. Absolutely crazy. And it dropped fast. Really fast. AUM of 71.5 million, and dividend yield doesn't really matter. It's above, it's not like, what is it, 70 or 80% or something like that. It's just astronomically crazy. It's just insane. Insane's a better word. Last couple of dividends, we had 56.5 cents. We had 57 cents. We had 54 cents. And now we have 46 cents. So again, the dividends continue to fall. And that's what I didn't want to happen, because we started out in the 70s and then the 60s and then the 50s. And now we're for the first time in the 40s. And then we're going to look back when it's in the 20s or the teens and go, we saw this coming. Why did we buy this? And I'm going to say, well, I don't know why I bought it, because everyone wants to watch my money erode over time. Just kidding. I do this for me. I hope you guys don't feel any way, shape, or form responsible. I knew what I was doing when I bought all these funds. I knew they're high risk, and it has been very, very fun. And if anything, I've learned quite a bit for losing a couple $100. So LFGY, we're just going to hold out. We're going to hold out and see how this market does. I like the idea of it holding the YieldMax, like the crypto and tech stuff, and the other one's the AI stuff. So maybe it'll bounce back. Maybe it won't. Let's jump into that other fund and see if it's beaten down nearly as bad as ticker LFGY. GPTY. I always forget the names because there's so many of these now. Average cost of $50.07 and a current price of $40. Down 20.11%. Oh, man. Again, a really ugly chart. Volume is low. AUM on this one's really low, 21 million. And I think this one's so low because it kind of was released when the market was super red, and everyone's like, I'm not buying anything. I'm especially not buying a YieldMax fund where the other one just tanked. So I think it's going to stay low for quite a while. We can see last couple of dividends. We had 29 cents, 32.5 cents, 31 cents, and 31 cents. I mean, could be worse. To be honest, I would prefer GPTY over LFGY, even though the dividends are a lot less. It's just more consistent. We're not seeing it drop by 20 cents in each dividend yet so far. So hoping for the best. Now, I will remind you guys, these dividends, when I read them off of the Moomoo website from my account, these are per 1 share. See, it's 32.58 USD dividend per share, not per 100. When I read it off of the tracking spreadsheet that I'll show you guys at the end of the video, where we wrap up all the really important data, it's going to tell us per $100 invested. That's the difference. I get comments saying, oh, this isn't true. These dividends were this much per share. And I'm like, yes, that's per share. I'm talking about per $100, just so you guys know. GPTY, can't say much about it yet. We'll see how it does. Let's jump into the new fund. I wonder if it's even bigger than GPTY, ticker SDTY. I'm very curious as to if YieldMax is going to keep pumping out these weekly payers despite the market tanking, because in my opinion, it'd be better to wait. Maybe I'm wrong on that, but I would rather have them come out at a time where the market's a little more solidified and we're not watching things drop 33.5% in their first 6 months of trading. We have an average cost for ticker SDTY of $50.46, current price of $45.50. Now, SDTY is the first fund by YieldMax that is a 0 DTE option contract. It's writing the covered calls. So this one is considered the same as what? QDTE. And then we have, they might put out some more funds for like the NASDAQ and for the Russell. So we'll see how those perform. So far, it's just been a tough time in the market for this guy. That's the reason it's so beaten up. The dividends were quite a bit less. We have an AUM of 9.45 million, very small, and dividend is negligible so far. We had a couple payments, 22 cents, 20 cents, and now 17 cents. So not great, not great. Again, implied volatility is going to make a big difference on this. I'm not sure how it's going to impact these, but this thing has only been trading for, looks like 3, 4, 5 weeks. Only time will tell. Let's jump into the fan favorites and see how YMAG and YMAX are holding up. We're going to start off with YMAG this time. Oh my gosh. Down 21%. Our average cost of $19.10. Currently it's trading for $15.10. We have 5.78 shares. The only bright side about this is all these buys down here are buying so much more than the ones that we had up here. We are buying so many more shares. So if this were to go back to even to my buy point, kind of the average, it would be insane. It would do really, really well. And what I love about this is we've had a lot of volume with these guys, YMAG specifically, for the last couple of months even. We have an AUM of 314.6 million. YMAX is larger than YMAG, and a dividend yield of 51.53%. Last couple of dividends, 5 cents, almost 14 cents, 17 cents, almost 17.5, and 15 cents. Not a bad payment, to be honest, from YMAG. Pretty solid. No complaints there. It's just dropping in price pretty badly. Again, what am I doing? I'm not buying any more right now. Once the market levels out a little bit more, I'll probably start scooping up some extra shares. But with drip on, I will continue buying over and over and over every week that I can, every time I get paid a dividend. And I am excited. I talked about in the beginning of the video why I was excited. This is a good opportunity. You know, it's hard to see everything go red, but this is when we make most of our money, to be honest. The S&P 500 has gone on a historic, 28% run. It's time for a pullback. I know it's probably due to tariffs. We have seen tariffs kind of shaking everything up, and it's giving us a better opportunity, although it is really, really hard to stomach. Really, really hard to stomach. So let me know what you guys think. Let's check out YMAX, see if it's holding up better, and, well, let's just hope. Let's just hope it's holding up a little bit better. If I had to guess, I would say YMAX probably is outperforming YMAG now because it pays out a lot more in dividends, and it's only down like 0.5% more. But still, our average cost, $17.45, which is continuing to drop because the current price is $13.56. Ouch. We have 5.87 shares. In the span of like 2 or 3 weeks, we will have a full extra share of YMAG and YMAX. YMAX is increasing faster because it pays higher numbers out in dividends. So we can see similar chart. It's ugly. It's beaten up. I'm not going to beat a dead horse. It is larger than QDTE. Again, those two kind of fight each other for the largest AUM. It's 768 million. Remember, QDTE was 747 million this week, and a dividend yield of 62.77%, which is increasing as time goes on because the price is decreasing. We are dripping over and over and over again. Last couple of dividends, we had 15 cents, 18.5 cents, 13 cents, and 24 cents. The winner of the week is YMAX because that's an insane dividend. We haven't seen one like that in weeks. A lot of weeks. It's been since what? December. Since December. Absolutely crazy. And the beauty of this is we're buying more shares now. We have a high dividend. We're buying more shares at a much cheaper price. Can't be too upset about it. There are some things to be happy about. We got to cling to all of our happiness. This buy was at, what, $18? That's absolutely insane. And so now we're buying more at $13. We're getting a 33% better deal than we were prior. We just have to stomach some of the hard stuff in the market. So what we're going to do now, we're going to jump into our dividend tracking spreadsheet. It's a pivotal part of these videos and see what the actual returns are. Because looking at dividends, looking at charts is fun, but those dividends and total returns, they really matter quite a bit more. So let's jump into that spreadsheet. I'm running out of space to even show all of these because we're going to have ulty on here too. I'm going to have to start to scroll, which is crazy. But looking at this, I'm really excited. I will say this again. It's going to be so cool to look back in a year and think like maybe in a year we've been in a bear market for a while. Things have been trading sideways. Maybe they're back up. Maybe they're over what we purchased them for. It's going to be so cool to see like, oh, this is what we were paid out during this time of the market. This is what we were paid out, and have all this data on here. That's why I like this. This spreadsheet is available for sale for those that are interested, for our tier 3 members. You just have to be a member for 1 month and you get access to it permanently. It's not like I'll close your access or whatever. I don't even know how to do that. But just so you guys know, it helps me do these challenges. No pressure. If you're not interested, don't buy it. Put your money into the market because it's a red market and it's a good time to dollar cost average down on some of your stuff. Not financial advice. I always have to say that. Hope you guys know. So let's look at the dividends. We have iwmy with a pretty decent dividend, 85 cents, higher than last couple weeks, but still not a crazy one. I've been happier that it's staying kind of consistent. It's slowly going down, like we had in the low 90s, high 80s, and then even into the 70s, but maybe we'll hold out. QQQY bounced back up with 65 cents, a really good dividend for QQQY compared to the last couple months. Not phenomenal, but better than what we've been seeing. WDTE, again, kind of a slow trend downward, not as bad as some of the others, but you take what you can get. Then we have QDTE, absolute terrible dividend, 45 cents, the lowest we've ever gotten from QDTE. This thing used to pay $2 a dividend. Okay, it did that a couple times in December, but it used to pay higher, over $1, and we've seen it kind of fall, which was really disappointing to me. XDTE is the same kind of thing. This was a terrible dividend for XDTE, an all-time low. The reasoning it is an all-time low is because we recently bought another share, and so this is with 3. So it paid out 41 cents with 2 shares, and now it's paying out 43 cents with 3. That's how big of a difference it is, and it's awful. RDTE, a new all-time low, 45 cents. What is going on? What is going on in the market? We have YMAG, 87 cents, a good dividend. Solid, no complaints, higher than, probably above average even. We've had some crazy ones that have pulled the average up, but really, really solid. YMAX, insane, $1.38. The highest I think we've ever seen from YMAX. Let's go. And we're buying more and more shares, and we're getting a good price. I've already said that, but I'm just pumped up about it. Then we have YBTC, 49 cents. It's not terrible. It's up a little bit from last week, but I don't want to see this thing trailing downward. It's been a tough week for it, so we'll cut out some slack. LFGY, 93 cents. Again, it's kind of falling off. We're getting lower and lower and lower, like I said, which I don't like to see. It needs to bounce back up and be a little more consistent. If it fell into the 80s or 70s, I'm going to be really bummed. Really, really bummed. GPTY, 62 cents, solid dividend, staying more consistent, not the lowest, kind of right in the middle. Even in this market, it's right in the middle. It's consistent, and I like that. SDTY, lower, 34 cents. Because of the market, I'm gonna blame it on the market. It's just going down. I'm curious how this month is going to stack up against the last couple months because everything's just going crazy far downward. But some of these dividends are near all-time highs or averaging out. So pretty solid. Let's jump into our dashboard and see how it compares so far. So the interesting thing is we're only 10 days into March right now, but we're already at nearly half of what we had for last month's dividends. So interesting. Maybe it'll be a really good dividend month. Now we have a lot more XDTE now for the first time because we bought another share and the value hasn't eroded as much since because that share was purchased recently. Not too crazy. I always like to jump into this tab and check out where the dividends have been falling. We had a couple really solid. December was just insane for QDTE and XDTE, even more so for QDTE. But let's check this out. So we have YMAG, not terrible. Again, we're not only a third of the way through the month, so it shouldn't be at half, and it is at half. And YMAX as well. YMAX is on for like a really solid month. Some of these other ones, they're a little bit messy because there's only been a couple dividends so far, so not too bad. Overall, I'm really happy with this. The way it's paying out, we're getting $77.66 an annual dividend, or that's just what we got in 2024. So, and that wasn't even for a full year. That was only for a couple months. So it was really solid. Lots of dividend payouts. We can see daily we're getting $1, weekly $7, monthly $31.70, and annually $380 annually, which is crazy. Yield on cost is 27.31%, and our dividend yield is 33%, which is insane. Absolutely insane. That's pulled from Seeking Alpha, which all calculates based off the last dividend paid out. So it's a little bit different. But let's jump into our positions tab and see. Are we making money? Are we losing money? I haven't checked it yet. I updated it, but I didn't look because I want to do a live reaction. So bear with me. Moment of truth. No, I've updated everything. I've plugged in all the dividends as in the weekly dividend log. You guys saw that. And so this is going to show us, is anything in the green? Please, something be green. Please. YMAX is green by 0.63%. Let's go. all the YMax haters out there, I used to be one of you, so I'm not that upset. Let's go. I feel like this is the funniest thing. I feel like such a little like stock influencer. The entire account is red, completely red, devastatingly red. And I look at the one green and go, let's go. We're making money. That's how we do it, right? That's what you're supposed to do. You cherry pick the ones that are green and showcase those and don't show any of the red. Let me just I can't do it on my hands, but like if I could block out all the red and be like, I'm up 0.5%, like no big deal. Like subscribe to the channel. Like if you want to make crazy returns like me, if you want your account to look like mine, subscribe because I am making cash. That's how they always talk. Anyways, gross myself out a little bit. Sorry about that. Moving on. How bad is everything? WDTE. WDTE is the second best performer in the account, down less than a percentage. Less than 0.1%. What is going on? Defiance. You had me fooled. I definitely thought it was going to do worse because it did drop. Yeah, down 12.65%, but no. Now it's just showing off. Pretty crazy, actually. Pretty crazy. If we have like one decent week next week, maybe it goes up a little bit. But that's the thing with these ones. I don't know if they're going to bounce back at all. We haven't really seen them bounce back much because they've not really been in a great bounce back market. But are these going to, if the market goes up like pretty substantially, are these going to follow or are they going to still go flat and pay everything out in dividends? I don't know. That's part of what this challenge is for. We're now seeing how they perform in a red market. And guess what? They go red just kind of like everything else. But all in all, I'm not too bummed about it recently. I am really curious how they perform. But let's keep going. iwmy and qqqy are holding up really well, surprisingly. Like looking at how crazy down they are market-wise, you'd expect them to be down nearly double digits, but they're not. And that's why the account isn't down by that much money. Like, let's be honest. It's not even down 9%, like I was saying. WDTE, absolute champion of the week. YMax is our one green, but WDTE, not too bad. Then we have QDTE, $2, 2%, 2.7%, and XDTE, 2.14%. So QDTE worse than XDTE. XDTE comes out on top, even though it pays less in dividends. It's holding up better price-wise. Again, RDTE is down 5.86%, which is terrible, but it could be a lot worse, and I expected it to be a lot worse. But I thought that QDTE and RDTE were going to be a little bit closer. No, QDTE is still holding quite a bit better. And then we have YMAG down 2.3%. Definitely the lowest YMAG has ever gone. I don't think it's ever been in the red on the account. And I am bummed. It just didn't give out enough of a dividend to stay green this week. And YMAX did. Now, will YMAX be able to continue this? I don't know. Probably not. If it keeps paying out these insanely high dividends, that dividend is the only reason it's green. Paying out its all-time high dividend. So, next we have YBTC down 11.28%. Oof. That one hurts. Not as bad as the next couple. LFGY down 24.5%. Awful. Absolutely awful. It pays out high dividends, but it just drops in price, and that's all there is to it. Then we have GPTY down 17.43%. I'm a little bit surprised that the newest ones are just the worst performers. I don't really understand why that is. People just aren't buying them as much, I guess. They're not as sought after. They didn't have time to really get situated. I don't know. Do they need to get situated? It's just a covered call ETF. Is it new people? These aren't new people writing the calls because they're not even calls. This is YMax. So I don't know why they're performing this way. I'm curious. Let me know if you guys know down in the comments. And then we have SDTY down 7.33%. But we're not done yet. Let's see what's paid out the most in dividends. And I can already tell you it's going to be YMax because it was YMax the last week and it had a record dividend. So total dividends received. IWMY paying 18 so far, and QDTE paying 18. And here's what doesn't make sense to me. If QDTE is paid out $18 and IWMY is paid out $18, QDTE's dividend yield is like 40% compared to IWMY's 100%. But price-wise, what did we buy them for? Oh, I guess because IWMY is $34 and QDTE average cost of $42. That makes the difference, but interesting. Very interesting. YMAG coming in second with $19.72 paid, and YMax paying out $22.42, which is crazy. Absolutely crazy. And then, WDTE, $10, bringing up the lower end. XDTE or RDTE paying out a lot. XDTE, $12.06. So XDTE and WDTE, lower dividends, better return than some of these other ones. QQQY, $16.43. Not as bad. And that's the thing. That might be the theme for a while, guys. The theme might be not as bad as I was anticipating. Until the market flips, I'm happy we have something in the green. I hope it stays next week. Please, YMAX. Maybe something will rebound. WDTE is also a front runner. Please, a good dividend would kick that back up. If we had like 1 more cent, it might even have put that in the green. All in all, really, really fun time. I'm excited. I'm still pumped about this account. I'm not selling. It's going to continue doing what it's doing, and we'll continue watching it. Dollar cost averaging will be very, very interesting. I hope you guys enjoyed this video. I really, really appreciate you guys. All the support you've given me. We're in a red market. It's just the way it's going to go for a little bit. Who knows how long. As always, I'm going to keep doing this. I'm not going to sell. I did some clickbait, like, oh, should I sell it? I was considering it a little bit, but I'm not. I'm going to hold. I'm going to do what needs to be done so we can continue to see how these perform in a red market. I'm really excited about Las Vegas. I hope you guys enjoy that style of content. Let me know what you think. I'm always interested in learning more, and it sounds like this is going to be a really good opportunity for me to learn a lot, and I'm going to be sharing everything I learn with you guys. It's the point of the channel. It's the point of this trip. So I'm really excited about that, and I hope you guys enjoy that style of content. As always, support if you can, if you like, if you want to see the newest updates, like, subscribe. And if you like this video, you're definitely going to like these videos that are popping up on your screen right about now. So thank you guys so much for watching. I hope to see you in the next video.